Hello, everybody. This is just a quick update for the start of the new trading week. Pretty slow weekend. Looks like we have tidied up a bit of liquidity. This little pump to the upside last night was an interesting one. I was watching it real time around dinner time again. The European time zone seems to be a key one at the moment. Europeans and Asians are doing the majority of the work lately, actually. So I think that's mainly because the US stock market's kind of a bit jittery at the moment, but God knows. I'm not going to try and guess at that. Interesting when we come out to say a 1 week on the liquidity. There is quite a lot of liquidity still to the upside here, and it's relatively thin to the downside. So that's just something to keep in mind. If we go to the 3 month, there's still not a lot to the downside here. Big chunk up here though. So sort of this doesn't really give me a huge amount in the long term as to which way we might go. Just have a quick look at the 6 month. I mean, there's still a juicy amount down here, but massive amount of shorts up here. So it doesn't have to come straight into these, but it will enjoy ripping those at some stage. It will be an attractive point for it to come to. So yeah, nothing much on that. But if we come down to sort of the 24-hour and even the 3-day, a bit more growing as we've been heading up. There's a bit of liquidity down here now. We'll probably, it looks like it's tidied up the majority of this big stuff on this pump. It's a shame it didn't go a tiny bit further. I think the next take profit level on the bot was just above there. But yeah, it looks like it might try for a bit more upside at some stage. But yeah, decent amount below. So kind of stuck in a range at the moment, and yeah, tough one to call just based on liquidity, but also because there hasn't been a lot of trading over the weekend. Like the volume is super low in these two candles. So I'm not paying too much attention to the fact that we have a decent sort of bullish engulfing here. It looks like it's playing out. Still haven't got above this trend line here. Still a lot of wicks to the upside. And I would have liked to have seen a little bit more of a wick to the downside here before we actually go up. There is another chart you can see, or another indicator you can see on this now. I threw this on. I found it over the weekend. It's a smart money indicator. It's supposed to tell you when smart money is taking longs in particular. And it has been pretty good in terms of picking reasonably close to the start of big pumps. As you can see here, like it would have signaled basically around that point there to take a long, and then you can get out on your own rules, but the first take profit level for this one, or majority of take profit, would be there. But to be honest with you, that being that extended, I would have held onto it a little bit longer as a swing trade anyway. What we can see here is stochastic momentum has ticked up outside of the bearish control zone, but these indicators here are still very much bearish. We still haven't got any bars to the upside on this smart money indicator, so I'm sort of being cautious, I guess, about this level here. We still could make our way up into the 100 EMA and the 50 EMA, those sort of levels, but we are well below the fast moving band on the pi cycle indicator. And typically, as we've said before, once we get below that, it can stay below that for quite a while. So given there's not a lot of liquidity, given the general stock market looks like it wants to sort of roll over a bit, it's not expecting huge upsides, rip to all-time highs and stuff like that yet. So as you can see, this indicator does a pretty reasonable job of getting decent uptrends and picking tops on most things. Not necessarily crypto when it's in a big run. If crypto breaks out, it will generally go longer than what this indicator will tell you in terms of the take profit signals. But for general, like overall in general, it's pretty solid. I don't mind this one. Anyway, so yeah, NASDAQ, lower high here by the look of it. I'm still expecting it to come into this sort of level here, about the 19,000 mark over the next, could be over the next couple of weeks. But we could get a pretty quick sell-off as well. We haven't seen like a 2% downside on the S&P 500 for a while. We're sort of overdue. And yeah, again, sort of lower highs. Looks like a double top, essentially. We've got a couple of wicks to the upside here. What we can do is we'll look at the weekly. So we sort of got tweezers forming here, which is a bit of a reversal pattern. That is a reversal candle on the weekly there, typically. So we haven't got any engulfing yet, though, at least on the weekly. Monthly, I suspect. Monthly looks bullish, but yeah, that's an interesting chart on the monthly, I would say. If you just were looking at the monthly, you'd probably be holding right now. But it is overextended, but on the monthly, there's no real sign that it's coming down. So obviously, we're looking more on the weekly and the daily to see those decent trends play out. Could just be a sideways consolidation too. I'd expect it to close this gap though, at least. IWM, so realistically it's higher, broken above the 50 EMA, so on decent volume, even though that's a red candle, that's kind of bullish really. Smart money indicator is bullish as well on IWM. XLY, XLP, an inside candle, it's kind of bullish still in the bullish control zone, suggesting, again, we've still just got that shift. Money is just shifting around in the markets. No real sign that it's actually coming out of the market in any significant volume yet. Equal weight is trending down still. That's probably the only sign, and even still, it's kind of sideways. So again, it's suggesting that maybe a little bit more downside, but there's no major breakdowns or anything like that at this stage. Dow Jones versus gold is still trending up slightly. We still have global liquidity too. This orange line here is still trending down. So that's just something to watch out for. It's kind of a risk off environment, I would say, at the moment to a degree. And that's, I think, why Bitcoin's been hurt a little bit. The Dixie is still trending up. Had a couple of downish days, but it's still in an uptrend on the daily, really. Stochastic started to come down, so we'll keep an eye on it. Might be starting to roll over. Yeah. If it drops, then I'd expect stocks to go up and potentially Bitcoin to go up. VIX spiked a little bit on Friday, but nothing to really write home about. Whoa. Treasuries dropped significantly. Bonds, high yield bonds are dropping. Yeah, right. Interesting. Bit of a capitulation there. Well, not, sorry, not full capitulation, but definitely that was significant. That's on the ASX, so don't pay too much attention to that, but it's been a reasonable indicator for me to follow. Skew is still going down, and this, again, is probably the biggest indicator that we're likely to go down now. The options market, I believe, I watched the FX Evolution video on the weekend. Really useful if you're looking for good macro videos and even sort of daily scans as well. He looks at things a little bit different to me, but I certainly take his opinion into consideration. Copper's had a little bit of a bounce here, but nothing huge. We kind of need to get out of this bearish control zone here on the stochastic. Little tick up on this current bar already, so yeah, we may be finding a little bottom here. Gold is pretty flat. Again, below this level here, I'd be starting to worry. If we can, break above these sort of levels here, then it's probably going to go on a decent run. 2-year, 10-year. Now this is interesting. We are getting a decent drop on this. We've had this sort of thing before, but just something to keep an eye on. This is the recession sort of indicator for me. But no major concerns yet. It's just the 10-year is getting a bit of interest, so it's interesting. People are starting to look more towards a bit of safety, a bit of long-term investment stuff, long-term safety. Have a quick look at the Brazilian dollar. Holy crap, it's still going. Yeah, looks like we're going to challenge these lows, I would think. Just going to put a ray on that. That's your target. If we slip through that, then good night. I don't know that that'll hold it up very much there. I'd say it'd be more around this 16 cent. Mag 7 had a bearish engulfing, which is interesting. So again, that's quite bearish on them, which will potentially drag the market down, at least the major indices, the S&P 500 and the Nasdaq, just because they make up such a high proportion of it. So that's something to keep in mind. If you're looking for bullish, it's probably going to be in the Russell. Oil, it looks keen to get back up to this 800 EMA, up to that sort of 84, 85 mark, which again would probably be associated with a drop on the S&P 500 and Nasdaq. And that could be why bonds are going up as well. If people are expecting oil to go up, it means inflation's going to stay up and rates will stay higher for longer, which isn't great. Have a quick look at ETH. Yeah, same sort of thing as Bitcoin. It's kind of in no man's land. Again, a bullish engulfing today, but not huge volumes. So I wouldn't get too excited just yet. And I think that's about all I was going to have a look at. Tesla's getting some interest. Actually, Tesla's signaled a buy there. Interesting. It's had a lot of interest since then, though. Tough one to trade long term. This is the kind of thing you want. You want a signal like that, and then to hold until the sell signal, which we've kind of got here. Like that is suggesting Tesla will go up. But it's not 100% perfect. I haven't fully back tested it to see just how good it is yet either. It's just an interesting confluence for me at the moment. Just so you're aware. UK oil doesn't look quite as strong as US oil. Ooh, sorry. This is an interesting one too. Japanese yen is sliding versus US dollar. Everyone's expecting some intervention from the central bank there, which could bring it back down quite a bit. I'll probably try and get it back into these levels here, but I don't know how much they can do that anymore. They've been intervening for so long. Just not quite sure. Chinese market's been interesting too. Like, if you look back at the Chinese market, it's been in a downtrend for quite a while. Realistically, it peaked around there. I think it did hit a higher high there, or the all-time high there. So that's in January 2018, so 6 years ago. It's been pretty well down since. But it looks like we're kind of broken out of this trend line and just retesting it. We definitely broke out of this one. That was a good technical sort of retest of that trend line. But it'll be interesting to see how it goes over this. See if we can hold that one. It's definitely stronger than what it has looked for a while. But I think it will be hurt. If we break above this level and retest that level, then I would call that a recovery on the Chinese market. But at the moment, it's still kind of wedging down. Yeah. definitely not a lot of interest in it at the moment, put it that way. All right. That'll do for today. To sum that up, I guess, is basically still looking at sideways to down with maybe some shorter term bounces, particularly on Bitcoin, just to try and snag the liquidity. Percentage of stocks above the 50-day moving average. It just shows you. I think the money's moving around still. There's not a lot of interest in the big guys at the moment. The market seems to think they're overextended, so we need to have a bit of a correction back into more reasonable levels, so people think that they're good value again. All right, catch us later. Oh, Joshua, you sold all your stocks on Friday. That's probably not a bad level to sell. Just beware that I am still expecting a run up into the election, mainly because they're likely to do something to get oil prices down. So if you see oil prices dropping considerably, especially at the pump in the US, then stocks are probably going to go up. And there will be a decent run into that election and potentially into the end of the year. Yeah, it's probably it'll be choppy, but generally up, I would think. It has literally never happened before that we've had a recession or a major crash in an election year in the US. So, but yeah, like the overall economy looks terrible. It's just the stock market doesn't always care about that. All right. Catch you later. You had a good amount in the Nasdaq. Yeah, that's a good time to take profit, I think. Trying to pick the bottom of the pullback will be interesting, but I think that 50 EMA on the daily is probably a pretty good target. Although it does quite often bounce off the 20 as well, particularly in a decent uptrend. So just change this to seems to come back through the 20 mostly. But if we do go sideways for a bit and then we get that lower oil and we get announcements that the market likes going into the election, then it'll probably the 20 will be the target, at least in the short term. And it'll depend where the stochastic gets to, I think. Yeah, it's just an interesting one to watch. If we see quick upticks in the global liquidity, then that'll potentially bolster the market as well. But at the moment, it doesn't look like the global Feds are needing to put any money into the markets at the moment, which is interesting. Like there's so many signals out there that are saying there's issues on the horizon. Even the fact that some AAA, what are they? AAA bonds are actually losing money. That's not a good sign for the overall economy. And the amount of leverage that banks have and stuff just to try and earn short term to cover themselves, with interest rates going up and stuff, it just, yeah, it's a tinderbox at the moment waiting for something to go off. But just remember, markets can remain irrational for longer than you can remain solvent. So just keep that in mind, I guess. I've certainly got, in my long-term account, I've got some short protection, basically. So my retirement fund, I've been just buying up a couple of these. I think I first started around here. Just sort of, these are effectively, these go up when the market goes down. So just a little bit of protection, and they tend to go up decent percentages. So I'm happy to get a bit of drawdown on these and just dollar cost average in. The more the market sort of goes up, sort of take profits out of the market and put it into these things. Got to be a little bit careful because there's no bottom on them really. But as you can see, they're pretty low compared to what they've been in the past. But you can imagine we get when did this start? 2015, when the market started going up after that. So yeah, they can spike pretty well. Obviously, that was the Corona dump in the market, and it nearly tripled over that time. So I'm expecting this to really rip if we get a massive recession type signal or something like that. I probably shouldn't have bought into this until I saw the yield curve cross the 1% mark. But you just never know. Timing the market's ridiculous, and it's a long-term account for me. It's a small part of my account, but potentially it will cover the losses of anything else I've got in there if the market shits the bed. So that's the idea of that. I think I'm in this one as well, but not a lot in this one. Anyway, catch you later.